Hello everyone. So in this video I will be talking about foreign exchange reserves. But first let's understand few other economic jargons. Okay? So let's get right into it. Foreign exchange market, it's also called as forex or currency market. It is basically a place where an individual can buy, sell or exchange currencies. It is open 24 hours a day, 5 days a week, excluding holidays. Now let me give you a basic example to better understand what foreign exchange market actually means. Assume that there's a car company in UK and it wants to buy an engine from a German company. But these two countries, they do not have the same currency. UK uses pounds whereas Germany uses euros. So how will they complete the transaction? Well, basically once the UK company receives the engine, it will go to the foreign exchange market. It will calculate how many pounds is required for 200 euros. It will convert the pounds to euros during the foreign exchange market, and then it will send that money to the German company. And this is how a foreign exchange market is used. And unlike stocks, a currency derives its value from another currency. That is why you will always see that the price of a currency is always shown in relation to another currency. Monetary policy is a set of tools available for nation's central bank to promote sustainable economic growth by controlling the supply of money available for national banks, consumers and businesses. Now I'll explain this definition using certain scenarios. Now we all know inflation, if it's too high, it's very bad. But inflation, if it's very low, that is bad as well, because that means nation's economy is stagnant. So the best inflation rate is around 2%. But how does the central bank control that? By using these monetary policies itself. Central bank offers money to the national banks and charges certain interest rates on that. And then the national banks offers loan to the consumers using this money itself. So if the central bank offers this money to the national banks with higher interest rate, then the national banks will have to increase their loan interest rate as well. Then the consumers, they do not want higher interest rate loans, right? So there is less money circulating in the system, meaning less inflation. But if the central bank offers this money to the national banks with a lower interest rate, then the national banks will offer the loans to the consumers with a lower interest rate as well. Then the consumers will be incentivized to take these loans and buy commodities or houses. That would mean that there is larger amount of money circulating in the system, meaning it will cause greater inflation. So this is one of the ways that the central bank controls inflation rate of the nation. Okay. Foreign exchange reserve are basically assets held on reserve by the central bank in foreign currencies. They are used to back liabilities and to influence monetary policies. So basically foreign exchange reserves are assets in form of foreign currencies held by our central bank. And it is also a common practice for most of the central banks in the world to hold a significant amount of their reserves in foreign currency. And most of these reserves, they consist of US dollars because it is the most traded currency in the world. But it is also not uncommon for the reserves to consist of euros, pounds or yen as well. Basically it is that the economists theorize that the foreign exchange reserve, it should consist of a foreign currency which is not directly linked to the national currency, because it will provide as a barrier during any market shock. That is, if the nation experiences any recession or there is an economic crisis, then at that time they can use this foreign exchange reserve to import various goods to promote economic growth. Okay, so basically they are most of the time used for import export and during any economic crisis. The world's current largest foreign exchange reserve holder is China, and it holds around $3 trillion of its assets in foreign currency. So I hope you guys enjoyed learning the basics of a nation's economy, and I hope to see you guys again in the next video. Until then, bye.